Hi there. Welcome to the Introduction to Forex video. Let's start by taking a closer look at what we will cover in this video. We'll start off by talking about Forex. What is Forex and how does it work? We'll then move on to looking at some of the common buying and selling terms. We'll also look at currencies that can be traded and their associated ISO codes. So let's get started. What is Forex? Forex is an acronym. It stands for foreign exchange. It involves buying one country's currency with another country's currency. Profits are made on small changes in the exchange rate. The money is limited. There is only a limited amount of money available. As more people buy the available money, there is less of it. And as a result, the value of the available money increases. On the other hand, if more people are selling a country's currency, there will be a lot more available and the value will decrease. It's all about supply and demand, and that's the way Forex trading really works. When there is a high demand and very little supply, prices increase or they rise. If there is low demand and there is a lot of supply, then prices will decrease or drop. We will be using charts to analyze the markets. There's no guessing, there's no gambling. We'll be using a trading system. This system will help us to identify areas where we can buy and sell. And yes, when trading the Forex market, you can buy and you can sell. There are no limitations and no restrictions on selling, unlike in other markets like the stock market. Now let's take a look at some of the buying and selling terms that we'll be using as we move forward. Now, buying is something a trader would want to do when the market is going upwards. As you can see in the chart, we've got two images. The image at the top has an arrow pointing upwards. That is showing us that the candles on the chart are going upwards. So you can see that they are steadily increasing, they're getting higher. There's a number of different terms that can be used when talking about buying. As you can see on the right hand side, you have a list. There is buy, buying. You could be long. For example, you would hear traders say that they are long the Euro USD. You also have bullish or bull. A bull market would be describing a market that is going upwards, the same for a bullish market. And finally, we have rally. When the market is said to be rallying, it means that it is going upwards. Now, on the other hand, the market can also be going downwards. And on the bottom left-hand side of the screen, I have a chart with an arrow that's pointing downwards. Just below the arrow, you will notice that there are some candles. And each of these candles are getting lower and lower. As a result, the market is going downwards. Now, there's a number of different ways that we can describe this, or there's a number of different ways that traders would commonly refer to this, either by saying selling or they are short. If this was the Euro USD, you would be short the Euro USD. Saying that the pair is in bearish decline or it is in a bearish trend would also say that the market is going downwards. And finally, you can also refer to it as a dip. Now, these are simply terms that traders will use when trading the markets. There's an interesting story about how they came about. For example, long and short. Back in the day when stock traders used to make money trading the stocks, the only way that they could really do that was when the market was going upwards. And it would take quite a long time for the market to go upwards. And if there was a crash or the stocks fell, it would normally take place very quickly. So it would take a very short time to lose money or for the market to fall. And so that's basically how people started referring to buying as long, because normally when they used to buy, it used to take a long time for money to be made, and short to sell when the market went down or started moving downwards. It normally took a very short time for that to happen. Now, there's also another interesting story about why it's referred to as bullish and bearish markets. As you know, a bull, when it attacks, it would lower its head and then raise it upwards sharply using the horns. So in the same way, when the market goes up, it's referred to a bullish move, mimicking the same sort of action a bull makes when it attacks. On the other hand, when a bear attacks, it raises its arms high and then strikes downwards. So in the same way, a bearish market means that it's going downwards. So these are just some of the terms that we will be using frequently when we trade the markets. Let's now move on and look at some of the currencies that can be traded, and their associated ISO codes. Now, ISO codes are issued by an organization. ISO stands for International Organization for Standardization. Every country has a currency, and every currency is issued with a 3-letter ISO code. As traders, we use these ISO codes frequently. So here are the 8 most traded currencies and their corresponding ISO codes. We start with the Eurozone Euro, the Great Britain Pound, the Australian Dollar, the New Zealand Dollar, the United States Dollar, the Canadian Dollar, the Swiss Franc, and the Japanese Yen. The ISO code for the Eurozone is EUR. For the Great Britain Pound, it's GBP. For the Australian Dollar, it's AUD. For the New Zealand Dollar, it's NZD. For the United States Dollar, it's USD. For the Canadian Dollar, it's CAD. For the Swiss Franc, it's CHF. And JPY for the Japanese Yen. So that's it for this video. Thank you for watching. I'll see you in the next video.